The Obama administration's efforts to reinflate the U.S. economy with government spending is destined to do more harm than good. That's according to Marc Faber, author of the Gloom, Boom, and Doom Report. He joins me now. Why won't the Obama administration's stimulus efforts work?
Well, basically, you stimulate an economy, or you try to do that through monetary and fiscal policies, financial policies. And the result is usually not very desirable. Several studies have been published by academics, the latest one by Robert Barrow of Harvard, that essentially show that government spending has a multiplier effect of less than 1. In other words, doesn't stimulate the economy really. And when you have larger and larger fiscal deficits, your government debt goes up, and it keeps interest rates at a higher level than they would otherwise have been the case. But I give you another example. For instance, when Mr. Bernanke cut interest rates after September 18, 2007, the CRB index at that time was at 320 and oil price at $75. But when interest rates were slashed to 0, oil went to $147 and peaked out in July 2008. In other words, a little bit more than a year ago. And I think the increase in oil prices from the $75 to $147 actually killed the consumer even more than if interest rates hadn't been slashed and commodity prices hadn't gone through the roof, because there was no necessity to go up since the global economy was already weakening.
So, well, let's stick with that. I mean, hyperinflation has been a call of yours at some point down the road for some time.
Sure.
And that, I guess that remains a call, and are we seeing that same scenario replay itself now with what's happening in oil prices?
Well, I think we have to define inflation, and it is correct that some consumer good prices are going down, like a mobile phone and so forth. But with every new technology, when they become commodities, prices drop, whether it's a calculator or a TV set or a mobile phone. That is not inflation and deflation. It's more to do with productivity improvements and with technological progress. But a lot of other prices are going up, and I assure you, one symptom of inflation is always a weak currency. Countries that have deflation have strong currencies.
Well, let's stick with the strength of the dollar. You've argued that, very forcefully, you're in the camp that says debasing your currency is no way to signify economic strength.
It's crazy.
But let's take China then as an example. It's pegged its currency squarely to the dollar, has not allowed it to really inflate as a growing economy ought to. Aren't you concerned that the dollar peg by the Chinese is effectively undercutting the argument of economic force that you're talking about?
Well, basically they start from a very low level. And they had pegged the currency to the US dollar between 1994 and 2005. And after 2005, they let it appreciate somewhat against the US dollar.
But not over the last year.
Yes, in my opinion, not sufficiently. I think that's one of the policy mistakes they committed. They should have let the currency appreciate more. It would have been more desirable for their economy.
Would there have been, would we see real growth in China without the dollar peg?
Yes, I think so, because we're starting from a very low level. And don't forget, the exports are important, but so are imports as well. So net, I don't think that the trade surplus or exports of China are such a driver of the economy. I mean, there is a domestic economy that is thriving. And let's take an extreme case, because everybody always thinks that the US is the engine of growth in the world. Let's say the US would play no part in Asian exports. We in Asia, we have 3.6 billion people. I think we're large enough to sustain ourselves, but it would take a while to readjust the trade flows. But basically, we don't need the rest of the world.
Okay. Just to make a point that you are based in, your office is based in Hong Kong and you live in
Yes,
Asia.
but I'm not saying that because I'm living in Asia.
Right.
I'm just saying that if you take Asia as starting from Turkey and ending in Far East Russia, and in the north you start in Mongolia, Kazakhstan, ending in the south in Australia and New Zealand, we have a huge economic area where markets are not yet saturated, where there is inherent plenty of growth. We have low levels of urbanization, which would argue that essentially people will continue to need homes and infrastructure and so forth and so on.
Thanks so much for joining us today, Dr. Faber.
My pleasure.
Our thanks to Marc Faber.
Thank
He's
you.
author of the Gloom, Boom, and Doom Report. This is Reuters.